after 3 p.m. Eastern time on November 4th. We're seeing a lot of red today, 70+% of stocks declining. As far as the news grab or headline grab, you're looking at AI valuations too high, talk a bubble. We had some comments from Goldman Sachs, JP Morgan today talking about inevitable pullbacks. So market is slowly undergoing a correction. We have been sideways here near the highs. Recent pop up to that 69.25 level. We talked about this last week. We didn't love the price action watching gap, gap, gap. So I'm also not surprised that prices are backfilling a little bit. We also stretched away from the 50-day moving average by over 300 points. That was a huge red flag for me on the short-term technicals. And here we are responding to a little bit of decline. So the nice thing is we have been hammering some wins on daily profit play. We took a nice full winner yesterday. We had a 50+% winner today, and also grabbed a couple of profits on double up. Today, actually, the double up trade is still looking good. I'm no longer in the trade. I took it for a net profit earlier, and I closed that out officially for my members. But that trade was an 1820 fill. That's now trading for 1350. So you're up $470 on that trade if you're taking profit. The other side of the trade was a max risk of $2. So at one point, I was actually updating this in my Telegram and just updating a few timestamps if you are watching. But here it is. So I updated this a few times. I closed out the trade around, let's see, I sent the alert out probably just after 12 noon Eastern time. Let me double check that here. Just around 107 Eastern time, I sent out the alert that I closed out the trades. At 120, winning sides under $15. At 134, winning sides under $14.50. At 140, under $14. 244, 1275. So again, I mean, these are 0-day trades. If you're managing this stuff, 1820 minus 1275, you're up $545. Again, max loss on the other side is 200. You're up 345 in the day. Not a bad trade. Considering the net risk on the day would be, I'm trying to think what the net risk was. If I took a $200 net risk and 180 net risk, so 200, 180, I mean, net risk 380. And even if you give up, a full loss and a win, you're managing, 2 to 250, 300% on one side of the trade, and you're even taking a full loss on the other side of the trade. So you win 200+% on one, you risk 100% on the other, you walk away with a nice net gain. That was a good result today. We ended up grabbing about 60% net profit on my trade this morning. Unfolding, Dawn asking about what gamma indicator I'm using. A couple of them. So this is the one I've been using the most frequently for the last 6 years. This is Dynamic Trend. And inside my Discord, I have a link for this. I use this 0DT every single day. I'll show you what it looks like on the study here. This is my Gamma Squeeze Index. I have a purely 0 DTE gamma play. And then I go from a 0 to 4 day. And then I have a 1 to 2 week. So, I mean, a lot of trading right now is very, very short-term oriented. We've seen this in the, option volume reports. We're seeing like up to 50, 60, even up to 70% of all daily option volume is 0 dated on the indexes. So ultra short-term is what I focus on day in, day out. When we talked about this morning, it was a little difficult to pick right in the morning because it was such a wide move and a big gap to the downside. All I saw was bearishness. So what I decided to do today for the trades that I took for my double up service is we started out here for the morning. I let price, we allowed price to rally back up. We took a daily profit play shortly after, put our levels in, and gave us a pretty low delta, got filled for $1.05, closed it out for 50 cents. It's trading for like 5 cents right now. If you want to take all the profit out of it, you get like 90+% credit on the daily profit play today. But I looked at the levels where, okay, if we, gap lower, come back up, and then just think of technicals, right? If technically price was going to gap fill today, that's where I looked at putting one of my double up trades. So it's a low risk, high reward trade if prices were going to continue to go up and fill today's gap or get close to it within about 20 to 25 points. Okay, so that was one opportunity. The other one was looking to revisit the lows. And I put that price at a sell point of 67.65, and I was 20 wide. So 67.65, you can see here that we came down to 67.66. We came down here again to 67.66. I mean, I don't have to be perfect, but we are within about 14 points of that trade. And I'll continue to watch the close and see, like, if we waited to cash settle, what would the trade be worth? Because right now it's still in profit as long as you're within about 20 points of the strike. So if we're inside of, like, let's say 67.83, we're going to make money on this trade. So 67.83 all the way down to like 67.47 or so. That's a profitable, like, trap for profit. Ideally, the closer you are between like 67.70 and 67.65 is the perfect trade. 67.70, 67.65, 67.60. That would be like the biggest, fattest profit, where you could make somewhere between, you know, $1,300 even up to $1,800 today on a risk of $2. So I'm risking 200 to potentially make $1,800 today. That's a great trade. But I was happy to walk away with a couple $100 and, call it a day. And I don't have to sit here and manage it all the way to the very, very end. So anyway, we'll watch that by the time we close. Like, where does this thing cash settle? And I'll update it in Telegram. I wouldn't be surprised if my message is, this is why we manage profit. Because the risk is already taken care of in a strategy like this. So our goal is to manage profit to the best of our ability. So I took 2 trades, and this trade up here was a full loss of $2, and this trade down here is offering 300% profit. So you can lose 100, make 300, you walk away profitable, right? So anyway, dynamic trend. This is what I use every single day. I have an affiliate link that is specifically a package that they built for me that is a zero DT focus, so that you have this exact gamma feed with all of your 0 day trades on SPX, SPY, QQQ, whatever stock you want to look at. It's got the whole suite, and I do this stuff every single day. And so what I use is the Quote Stream Media package, which is a aggregate feed, and it takes in about 40 different option chains around the world. And that gives me a nice, reliable feed every single day in real time. So if I go pre-market, this was pre-market gamma. This is real-time gamma. It all changes real time. Okay, so I use dynamic trend. Again, if you want that link, I can share that, or you can come into my Discord. I'll share that link as well. Just let me know what you want. And then I also use, for TradingView, this team at Tanuki Trade also builds a really nice plugin indicator. And so I subscribe to this, and I'm an affiliate for them. I can save you like 10 or 20%. And also, I just was told today by their team that they also went live for their web app. So now in real time, this is a 15-minute delay. This is a 15-minute delay in gamma, and their actual, like, website here is a live gamma feed with positive, negative gamma, and then all of the big strikes. So I just got this today, so I'm going to start playing around with this as well. I have a link for that as well. My favorite and most reliable, what I've been using for all these years, is dynamic trend. This to me is, just, I pull up the chart. I've got all these, sticky levels that I can create trades around. I can accurately call my kind of highs and lows for the day. I pin prices. I mean, my double up service does really well with a strategy like this, and our daily profit play does well. And so anything that I'm focusing on primarily short term, this is what I'm using a lot of. Okay. See here. Steve says, how many days do you trade double up? I mean, if I see a good trade, Steve, I'll take a trade. I mean, I traded one yesterday and took 2 small losses. I traded today and had 1 win, 1 loss, and the net winner actually washed the two trades yesterday, as well as ended up in a net winner today. So I mean, if I see a good trade, I'll take a good trade. And usually on double ups, I'm sending out probably 1 or 2 days a week. I'm getting some really clean trades that I like. One trade might be like today, where it's a, trap above, trap below, and let price kind of unfold for the day, and we get a big fat winner, and we'll take a loss. Like, that's what I like to do, because I don't have to be perfect on the day. If anybody's familiar with trading a butterfly spread, that's what I do for my double ups. I trade iron flies and butterfly spreads, and I do it primarily in a 0 day or 1 day environment. But all that means is I can basically throw a net and profit trap, and if price just kind of finds it throughout the day, it doesn't have to be perfect, doesn't have to hit my perfect pin price. But if I'm within about 5 or 10 points of my profit trap, I start to see some nice profit. As it gets later in the day, like it is right now at 3:20, it's like this trade is offering up. It's down to a 12, 12.20 debit. So we're up 600 bucks on this trade. The max risk was $200. So I mean, I'm up 300% on this trade if I close it out right now, right? So I'm up $600 and the other one is down $200. So you net 400 bucks on the day. Your max risk was just over 300 bucks. Like you're over 100% return, losing a trade, winning a trade, and still making over 100% return on risk. That's not bad. So it's all in the strategy, and also like this software in real time gamma gives me a lot of great levels to have my visual roadmap where I think this is where prices can go. I try not to be perfect. I don't have to, manage this thing and all the way into the close. I'm not trying to be greedy. I mean, I look at basically if I have a trade that's running for profit and a trade that's at a loss, as long as my profit is bigger, my job is to manage the profit, right? So if I'm up 100 bucks on these trades, I'll typically take profit. So it's a nice win for the day. My daily profit play, if it's up another 50, 100 bucks to go on top of that, it's a nice way to have a nice daily income swing. And then trades like this, it's like they get nice and big. Like last week, we had a winner of $390. We had a winner of like $645. Today, I got a little bit early, but I still made 100 bucks today on my double ups. And right now, I'm showing you like it's up 500 or 600 bucks, which is pretty sweet. Okay. Butterfly trades. It depends. The butterfly spread is usually a debit spread, but it's a very cheap, inexpensive debit spread. And then the iron fly is a credit. And if you're familiar with that, I've talked about this in the double up master classes. And that is one where I am selling a strike. I'm selling a call, selling a put, same strike. And then I choose my wings. They look the exact same. So I'll show you the trade that I did today. So let's go to option strat. Okay, now the value is going to be off because I already took the trade. But if I do a iron butterfly and it's on an SPX 0 DTE, so go to today's expiration, which would be the 4th. The pin price was 65 and 85 and 45. Okay, so that was my trade. Now, when I took the trade, if you can see this net credit for 1332, my trade this morning was 1820. So I took the trade this morning for 1820. I don't know what happened to my drawing tool here. Give me a second. It's somehow missing. Let's see if this will work. It's not going to work. Anyway, I'll just talk about it. So 1820 was my credit, which means my max risk was $1.80. So potentially making $1,820 for a max risk of $1.80. And this is what it looks like in real time now as we get into the final few minutes of trading. So this is now at 3:25 p.m. and this is what currently is showing profit. Now we're trading at 67.73, which you can see here is inside of my profit trap window. Okay. Now, again, the credit is off. I had more credit on the trade because I was doing this way out of the money. But anyway, this is what the profit trap looks like at the end of the day. And as long as price is somewhere between, like I said, ideally the kind of fat win for me, if I held this all the way to expiration or at the very like final 5 minutes of trading today, would be if we're around 67.70. If you can see the number at the top, 67.70 offers about $800 of profit or so. And then over here, 67.60. So if I'm within about 5 points of that perfect pin price, that trade offers up over $1,000 of profit today. And, we'll officially know here in 20, well, I guess, in about 34 minutes at the close, but in the final minutes here, I'm just watching closely. So it's trading for 12.20, 12.25 right now. Trades up about $600. I am no longer in the trade. I've already closed out for net profit on the day. Daily profit was a winner. Double up was a winner. I'm just sharing like the best part about double ups as an example is you manage profit to the best of your ability, right? I've had one loser. That's fine. I let that one lose. It can lose the full like $1.80 or $200 that I was risking. This one is up $600. Let's manage the profit, right? I'm happy. I'd be happy to be out of the trade at $500 or $600 profit on this one, lose 200, make 300, $400 on the day. Very happy with that net result. Okay. How does this get better? Well, if this comes down towards 65 at the end of the day, we're talking like jackpot, where that's like the perfect trap on the iron butterfly. That is an $1,800 winner. And, you don't know until you try. But point is, such big reward opportunities for very small manageable risk. And what I like is This visual roadmap, it goes along with the saying that I use quite a bit for double ups, which is it's the Wayne Gretzky quote, and that is skate where the puck is going. And so using this software and using these gamma feeds, I can find a pretty good idea of where price and is likely going to go throughout the day. And a butterfly spread is a perfect way to trap some of those profits. And even completely losing one and winning one, usually the winner walks away a lot bigger. Okay. All right, so let me do this. I will share a link to my Telegram here. Let's do this. Let's go Telegram channel. Let's go Chris Pulver Trading, server settings. Nope, I need to go to invite people. Get out of here. Okay. Let's go to invite people. I'm going to make this link valid for 30 minutes. Okay, I don't like my Discord link to be sitting on YouTube where a bunch of bots and spammers can jump into it. So it'll be good for 30 minutes. New link, copy, and this is Chris Pulver Trading Discord. Okay, so if you join my Discord, great. You'll come in to see all my public channels here. First things first is read the rules. Just full disclaimer, I don't initiate direct messages. I don't send friend requests. So if you get one that you think it's me, it's not. It's going to be spelled differently. It's going to be a punctuation error. It's going to be a double up on a double letter. It's going to have an underscore. My profile is in all of the public channels almost every single day. So real Chris Pulver, that is me, nobody else. So you will see, and I can probably show you this right now. If I go to server settings, and where's my member list here? Members. Let's see how many people are trying to impersonate me. There you go. Here is one that's fake because it's real Chris Pulver, has my same avatar, but they're using a period, underscore period. They joined a month ago. I've been in this thing for over 2 years. That's a fraud. So I will kick them. Okay. Anybody else? This is me 3 years ago. This is me. Anybody else is trying to fake be or be a fake me? Nope. Anything in Pulver? That's it. Okay. So I do this stuff every week. I have to cleanse my channel. That's just my disclaimer. I hate Discord for that stuff. None of it happens in the public channels, by the way. If you're checking out my free group chat where you can talk to everybody about anything you want, you can talk Forex, you can talk stocks, you can talk options, talk futures, all these public channels, everybody can talk and see comments. There's no spammers in here. All the spamming stuff is direct messages and offline and private this. I just say keep it in the public channels. Okay. I have private instruction. I do, small workshops with groups of up to 10 or individuals. My affiliate discounts, here you go. So that Tanuki trade this on TradingView and their GEX website now. I have a 10% code if you click on that tanukitrade.com reference Pulver. There's a link there in my affiliate discount section. And then I also have a Black Friday stuff that I'll post on TradingView. Inside, I'm actually doing a live webinar on November 17th with A1 Trading. That'll be a lot of fun. I'm doing a end of year session as well as a forecast for 2026. And then I have my dynamic trend here. Let me make sure this is the right one. Here it is. So the dynamic trend is here. I pay over $3,000 a year for this service, and they built me one specifically for 0 DTE, and that is a 945 package. So you can save a lot of money. You're saving $2,700, and it's the link right here. So they give you an aggregate feed with CoStream Media. You can plug this directly into your broker if you want to. If you have, I think it's TradeStation and Tradeer are the two brokers that they're directly connected in with Dynamic Trend. I personally, because I trade with Tasty Trade and Schwab and Thinkorswim, I use the quote stream, so I have the aggregate feed. And in a way, I'm just going to say I like that one better because I've used it for 6 years. But I like it better because it's an aggregate feed of all different broker platforms, not just the ones you're connected to. So I feel like I can get a better reading on the gamma stuff. Okay. All right. How much of the maximum gain would be sacrificed if you're broke wing butterfly? It's a totally different strategy. I'd be taking on way more risk if I did a broke wing butterfly. A broke wing butterfly profit trap is only good for the end of the day. A broke wing butterfly, in my opinion, is not about taking it to the end of the day. A broke wing butterfly to me is literally taking a bear call spread top trade or a bull put spread bottom trade. I've talked about this a lot in my daily profit play in our master classes. I do take some broken wing butterflies in that service as bonus trades, and if I'm teaching a broken wing butterfly, it is simply to call the top of the market and then put in a profit trap with a broken wing, but you're usually taking on more risk than you are reward. And so I don't do that for double ups. If I'm doing a broken wing butterfly, it's because I want to essentially call the top, call the bottom, but also have that like Hail Mary trap at the end of the day if I need it. Okay. It also just kind of helps offset some risk. But broken wings, you're going to sacrifice the asymmetry on an iron butterfly or a typical butterfly spread is way better. So case in point would be, let's go back to the option strat here. Let me get this out of the way. So option strat where I built that trade out. If I did a broken wing, by the way, so this is my iron butterfly where I sold the two strikes at 65 and I went 20 up and 20 down. So that creates my butterfly look. Okay. If I did a broken wing, let's say that I'm calling the bottom. Okay. Let's say I call the bottom. So I'm going to delete this trade. So let me remove this one and I will turn this one into a put. So if I bought the 70 put, sold the 75 with two contracts, and then I skip, that'd be like a 55, I guess 70, 65 to 55, like that. You see how that risk comes into play? So if price goes too far to the downside on my broken wing put fly, I take on all that unnecessary risk, right? If I try to call the top in the market, let's say I did this with a, let's say I thought price could go up today to fill the gap around 68.50. So if I did a 68.50, buy the 45, sell the 50, and then we'll do like a 65 or 70. Same thing over here, right? So I'm essentially trying to pull in my credit, and as long as price stays, current price or lower, and obviously doesn't go too high in the market, I'm calling the top. So I just want my broken wing butterfly to offer me credit. And then if it goes into that profit trap at the end of the day, you kind of get like that last minute wall of protection. But if price goes too high, you obviously take on a lot of risk. So we want to be careful about the broken wings. So that risk on a broken wing is why it's important. Like set a broken wing at a spot you think that the top is very safe or the bottom is very safe because there is risk. But if I flip this into what I did with the iron fly, I'll just build out the iron fly here. So we'll go iron butterfly. And again, this was at the 65 pin price. And I went 20 wide, so 45 and 85. And here's what the trade looks like, right? So you can see that the risk side, and again, remember that the credit that I pulled in was 1820. So that's going to take this risk and make this way smaller. Our risk was here at the $200. So if you can, kind of use your imagination cap, for some reason my drawing tool is not working, but instead of taking on this risk in red, you can basically shrink this red in half and take this in half. So my risk is about right here at $200. My risk is over here at $200 and I have this big fat profit trap. That's not too bad. So way, way tighter risk, way bigger reward to risk opportunity on a butterfly spread or iron butterfly. Not bad. Does that make sense on the question? Okay. Somebody says you have Telegram imposters. I know. And I say the same thing. I'm on just a couple of Telegram channels. This is my primary one that I post messages to every single day. And then the only other Telegram services that I'm on are my channels that I'm running member services. So I have a Chris Pulver general Telegram that's right here that I'm posting all these messages with every single day. And then I have my members for daily profit play. I have my members for pinch point trading for my scanner. We're going to have a masterclass on that tomorrow. And then my Project Options Edge member service. So the only thing I'm on a Telegram is not private messages and not, hey, I've got this awesome thing. It's not me. Okay. I have one general Telegram and then I have my members only Telegrams for the services. Just so you know. So, I mean, and you know this, you know better than to like have a conversation with some, you think it's me and it's talking about crypto and it's not me. I'll just tell you right now. And you see me out here every single day. You see me in the public forums and on YouTube and running live sessions every single day. So you know where I am. You can find me. All right, good stuff. So it is 338. Price is at 67.80. That Iron Fly is now traded at $14. It's still up $400. If you're still managing the trade, I want to ask who in my double up service that got the alert today is still in the trade. Is anybody still in the trade? And if so, I mean, you're net positive on the day, which is great. That was the whole point. Just be careful that it doesn't get too slippery above like the 85 handle. If we come up here to 85 or 90, the Iron Fly becomes a loser. So, I mean, I look at this as a really good opportunity to take some profit in here, which is where I was managing my trade. That's where I took the profit earlier, came back down to retest later in the day. This is at 2:30, 2:40 in the afternoon. You had a nice little 30-minute window to close profit there for a big win of like almost $600 and this win of about $200 to $300. And right now you're still up about $400, but it's now crunch time. We're in the final 20 minutes. Either this stays in profit, which means we need to stay below like 67.83, and this might get better by the end of the day, or if it slips above 85, we're taking a small risk on the trade. So, moral of the story is we manage winners, we manage profits when you're in these trades, especially in a 0-day environment. And my favorite trade, honestly, is managing profit into like the 1, 2 o'clock window where I don't have to sit and hold this thing all the way to the end of the day. Sometimes I do, and sometimes we get lucky, and sometimes it slips, and I take a small loss. But anyway, we'll keep an eye on it. I'll see what this thing does by the end of the day. Okay. All right. Let's take a look at some top-down FinViz heat map. We have 70% of stocks declining today, led by the big guys. Tesla is down, Amazon down, Nvidia down, Oracle, Palantir, Google, Meta, you name it. A lot of down today. So are there some bright spots? Yeah, we've got some Berkshire Hathaway up, which I find interesting. Berkshire, so BRKB. Big move on Berkshire today. Why is that? That doesn't seem right. Berk. Do I have to go B? That's weird. The share should not be $9,100. BRKB. So 488. There we go. This one should be good. So BRK.B. There's what I was looking for. That's a nice little rip to the upside. 4.7. I mean, this thing's up 2.5% today. Do I like this enough to take a trade on it? Not really. Not really. One good thing is that they're sitting on lots of cash. We know that. Buffett's probably been, Buffett and company, sitting on a lot of cash for a while, enjoying some dividends, taking some, bigger stakes here and there. But obviously, when they buy things, they hold them forever. They have a pretty robust dividend portfolio. They're in a decent amount of treasuries. They've got a lot of cash they've been raising the last couple of years. They've been a net seller of stocks since, I want to say like Q3, Q4, 2024. I don't think they had massive participation in 2025 with this move. The Buffett indicator, which is stock value over GDP, is like 211 plus %. I think there actually is a Buffett indicator valuation model. Strongly overvalued. You have the U.S. stock market value over annualized GDP. That is a 270% reading. I think we're up to like the 2 to 3 standard deviations according to this. Now, this is a read of June 30th. So obviously we've gone a little bit higher since June 30th. So crazy stuff, right? But it's wild. And I don't know. I mean, if Warren Buffett is willing to buy treasuries, then I wouldn't be surprised to see maybe this is a smart play in the coming months, especially if the market's going to lean over a little bit more bearish. But I don't think the downside is too extreme at this point of the year. I think November, December, we still have some buybacks coming in. We still have some earnings that could stabilize things. Obviously, Trump could let loose on one, Truth Social comment that gets gets grabbed and heard around the world, and everything just goes right back up. But look at the technicals. Support at the 21-day, support at the 50-day. I've been calling for this 50-day moving average for a while, and honestly, when I was probably the most vocal about it was when we had this big correction on October 10th, and I thought, I cannot believe this thing is trying to hit this thing in one day. So it did hit the 50-day while we were in the futures market, but it did not officially hit for the SPX or the SPY. And so this is why I've been a little skeptical of, even at these all-time highs, I'm like, just be careful that we might face another pullback. So we got up to 690 on the SPY. It was like 69.25. That high is 69.20 on the SPX, and we pulled back a few hundred points, but still pretty well supported. Even today, most of today's price action is really done from the futures flows, because we gapped way lower, and price is actually where we opened here. And in the first 5 minutes we pushed down for the day, we're actually sitting right back at that level. Like, the market makers on the day might do their job and have prices essentially go nowhere. Open here, close within just a couple of points. I mean, market makers, brilliant job today. And so that's what Daily Profit Light did, is we took a nice profit of that. If anybody is in Daily Profit Light, that thing is offering a 100% credit. So just let it expire if you want to, or take your 5-cent debit out of $1.05, which is a pretty nice way to make $100 today. Ethereum down. Yep, I saw that too. And I look, if you've got some risk off trading, you're going to see some Bitcoin down. And I mean, from a technical standpoint, I posted this earlier. Look, to me, I think that everyone in crypto, Bitcoin enthusiasts especially, were really excited that when the market was down in February, March, April, that we had like a 20% peak to trough in the S&P and a 20+% peak to trough in the Nasdaq, and Bitcoin is only down like 30%. And they're like, oh, this is the disconnect we've all been talking about. Now it's going to trade better. It's still volatile. So the S&P has made several all-time highs. Gold has outperformed Bitcoin this year. But if you look at this support and this support and this support and even future support, I think that if we don't bounce hard around this like 100K level, then we could still drift into maybe 90,000. We could drift to like 90,000, maybe even slightly below that. I think that's an important line in the sand to watch, though. So if 100K is responsive with a bounce, okay, there's maybe some buyers there. If 90K is responsive, then that's the technicals I'm watching, because that would be a multi-year support level, right? So we'll see. But similar price action where we pulled back to these moving averages. If we do the same thing here, pull back to the moving averages, spend some time kind of bottoming out, troughing a little bit, and then working our way back up. Let's see if we get it. So I don't know. I'm still bullish on Bitcoin. It's a little pain trade right now, and that's fine. Gold, also waiting to see if we will pull back deeper on some of these moving averages. The spot price gold, we're in between the 21 and 50-day moving averages. I'd like to see this pull back deeper. I still believe that gold is either going to consolidate long enough that this 200-day moving average catches up, or we will continue to see a decline. We'll continue to see a decline all the way down to this 200 moving average. So it's a crazy high bar count, man. We go all the way back to October 2023, and we have gone 520 plus bars since we've hit the 200-day. And the last time we had to run that long was back in 2009, 2011. That was up over 600 bars, and it got absolutely smashed to like a 30% correction to the downside. So if this is going to be like a slow unraveling, I could see a 15 to 25% correction in gold. Part of me hopes we get it, because I'd like to scoop up more gold and be medium long-term on it and be bullish. Silver, similar. 21 and 50-day moving average. If this is just a little consolidation for a leg lower, I still like the bullish posturing of silver. I think it still looks pretty good, since we did break all-time highs pretty convincingly. I mean, if we go to the weekly chart on XAG, I mean, I get it. Like, this is a previous high back here in 2011, and then all the way back here in 1980. I get it that maybe this is the top, and we're going to just head right back down and be nothing but a range trade in silver. I don't think that's the case. I think that silver is now not just an industrial metal, but now it's a strategic metal. And I think if we're going to do all the stuff in the computing space and AI and build outs and data centers and whatever. I think silver is an integral part of that. So I'm bullish, and posture wise, technical wise, here's support. Here's support. If we have a awful pullback, which would still be maybe 20 to 30%, that would pull back about 30 to 40%. That's on a weekly chart. That's pretty steep. But daily time frames, maybe a little bit more supportive in like the 20% region. So that pullback to the 200 days about 29%. Let's just call it 30. So if we pull back 30%, I'm kind of totally fine with that. I just took profits after like a 3-year position on gold and silver. So I am happy to get back in gold and silver, but it's going to be small, bite-sized, dollar cost averaging positions until I'm comfortable reestablishing my core position. And I will gladly establish that core position with years on the horizon. This isn't a race for me. Like, this isn't a sprint. This is a marathon. And if I can just get nice price action on silver and gold, I will start positioning. And then once I am more confident with the technicals, then I'll start adding options into my GLD and my SLV and my futures trades as well. So, but I'm going to let this kind of marinate. Like I said, 3 years of trading, positioning, and finally taking profits just off these recent highs. In fact, I was technically out of the trades before we reached the highs, but I'm not too far off. I mean, I think I closed out my silver trades. If I go SLV, the highs around 49, I closed out around 47, so I'm pretty happy with that exit. And then GLD highs at 403, I closed out at like 395. Again, not too bad. So within a couple of days to the top, I timed that pretty well. But now we're getting pullbacks. Okay, Bitcoin, last 2 days pretty nasty. Still has room to drop below 100, but 100 is maybe a nice little psychological level. If it bounces and goes back up, let's see what happens in the next couple of days. The market could slide down to the 50-day moving average, so that risk off tone would still bring assets lower. So just look, I think this is not the time to be a hero. This isn't time to call the bottom and buy the dip. Not yet. I think that if we give this market a little bit more time, either this 21 period holds right away and we go right back up tomorrow and fill this gap because today was a massive gap to the downside, or we fall a little bit lower under the 21, maybe come to the 50-day, and now we start talking. The market's been making higher highs and higher lows literally since April. So if we're going to stay with higher lows, that 50-day moving average around 6,600, 6,650 is a pretty important spot to hold support. I told traders this morning. I don't want to see the SPX come down and take out the October 10th low. If we take out that 6550 candle, my concern with that is that there is a structure shift in the markets. Technically, that'd be a pretty nasty structure shift. Okay, so I think if the bull market's going to stay intact, we got to hold here around 6,600 or higher. Okay. All right, real quick spot check. Let's go to SPX. I'm going to check that trade out. Look at that baby. Now it's trading at 1150. Quick update in Telegram. Edit. Update. 3:50 p.m. Eastern time. Winning side now showing under $10 debit. That's a pretty nice trade. Trade was at 18.20 credit, now showing a $10 debit. That's an $8.20 winner. Max risk of $2 or $1.80. So if I'm up 8.20 right now with a max risk of 180, that iron butterfly's up 455%. Not bad. Not bad. Cool. So again, in the final, 10 minutes of trading, I would just be taking the profit. That's such a good trade. If you're still in the trade now, it's down to 930. Grab more, down to $9. So how do we get that type of profit? Well, because we're coming into the final stretch until close, and we're only about $5 or $6 away from my perfect pin price, which is $67.65. So I'm only $7 off, which means this trade is very close to like offering $1,100 of profit. Because it'd be 18.20 minus the difference between current price and 67.65. I'll do the exact math here in about 10 minutes when the market's closed, and I'll show you exactly what the trade would be at the end of the day. So down, oh my gosh, look at that thing. $8. Ooh, baby. $8. Update 3:52 p.m. Eastern time. Winning side showing under 750 debit. That's a juicy winner right there. That's up over 1,100 bucks. Good stuff. Okay, what else? We did gold, we did silver, we did Bitcoin. How about oil? How about dollar index? Oil, pretty dicey, just choppy. I mean, pretty good support at 55. I think it stays there. Oil is one thing I'm putting on my radar for the next couple of years. I would love, and I don't know if this is going to happen, but I would love to see this swing high, low, lower high, lower low. I'd love it. I don't know what's going to be the case. I don't know if we have to have a recession for it, but man, if we see oil down into the sub 40s, if we see in the sub 40s, I will be happily and probably deeply dollar cost averaging into oil. Um, I'm basically willing to ride oil from 40 down to zero. And I mean, I don't know what the investment would be, maybe five or $10,000 total. Maybe 3 to 5% in oil. But I think that even going from, a beat down price, and I don't know if this is going to break the floor at 55, but if it does, it's like I'm looking at just long oil from here, from 55, 45, 35, 25, just establish. I mean, I don't mind doing this like maybe $2,500, another $2,500, another $2,500, another 20, maybe 10 grand. And that 10 grand could hopefully double over the next maybe 1 or 2 years. If oil goes from cost basis of like 45 and we go up to like 90 to $100 a barrel, I have no idea. But it's funny how this might be like this perfect technical pattern. This would be a fancy Gartley pattern, which you have a low and a high, and then you have a wave retracement inside of this. So a harmonic pattern that looks like that. And that could be like a beautiful technical pattern where we might come down to like this, $40 to $30 zone. That'd be, I'm not calling the bottom there, but I'm saying if you're just adding some positions, the likelihood of going from even this like $35 point to the merge, which is around this like 66 handle. I mean, if I own oil at like 40 bucks and it goes to 65 or 66, that's a 50% play. That's pretty good. Pretty good. So not bad. All right, we're trading at 67.70, final 5 minutes. That Iron Fly is up to, now it's down to 630. Woo, baby. This thing is getting juicier by the minute. It's going to be sensitive here, but a sub 7 is pretty good. That's 1,120 bucks. $6, under $6. Now it's $1,200 profit. Bulin, I appreciate that. I saw your thumbs up, man. Thank you. Hopefully you like it. Like I said, man, I am totally sacrificing the upside on that trade. But for my investment, if Tesla goes higher than 470 by any time in 2026 and into the expiration I have in January 2027, it's a 21% return on my investment. And that's not a bad chunk. I mean, I'll make, 10 grand. Honestly, if I do that for all my margin accounts, I'll make close to 100 grand on Tesla next year. So I just thought the premium was pretty enticing. But obviously, the covered call itself was up to 26% premium. So I thought it was important to add the protection and actually have double the protection with those puts, because I'll have two contracts representing 200 shares on the put side, and I have 100 shares that I'm long. So that allows me to hopefully, if I need it, to protect my downside even more aggressively. And where's my downside target? Well, if Tesla hits all-time highs and fails and comes all the way back down to this year's lows in April, then I'll start protecting some profit, like protecting puts. But my cost basis is down instantly from a 457 or 460 buy price all the way down to like 360. So I now own shares of Tesla with a break even of 360. So that's not a bad place to start. It's a lot of premium to pull in. Okay. Oil at negative prices during it was crazy, but it was also a fantastic recovery trade. I bought a lot of USO. I bought a lot of oil futures, and that trade worked out pretty well for about 6 months, like really well actually. And obviously, I had longer to run. It did extremely well, but anyway, can't win them all. So all right, 68. Look at this baby, 450. Whoo, baby, 357. Crazy, man. Update 3:57 p.m. Eastern time. Winning side showing 5 under 550 debit. So, I mean, if you close it now at a 550 or even $6 debit, 1820 was the credit minus a, let's say, a 550 debit. You're up 1270 on that trade. The other trade was only risking $200. You're up $1,070 on the day. Not bad, and you're only risking like $300 some on the day. So, like I said, do I like to hold these trades all the way to the close? No, but it's always an entertaining lesson for myself to, one, focus on managing the winners. And, the more I do it, the more I see it, the more I see these profits hit, the more confident I get to hold these trades just a little bit longer and take that little bit of excess profit. But, anytime I'm making 150% on one side or 200% on one side, I mean, the winner today up over $1,200. I mean, it's a 600% winner. You're up $1,200. You're up $1,200, and your max risk was 180. You're up 667% on a single day trade. Doesn't happen very often, but I mean, it is hella sweet when it happens. I will post it for Project Options Edge, Larry. I'll post it. So let me do that right now, actually. So I'm going in here. And you're going to get a better price because Tesla's down from where I bought it this morning. So Tesla's down to 444. I bought it this morning at 457. So if you like the trade, I'll just make a update here for Project Options Edge. Let me go Project Options Edge. So Tesla campaign trade, you could buy shares right now at 445. The contracts might be a little bit different now because I was buying this at 457, selling the 470. But point is, we can revisit this trade in class tomorrow. But here's the nuts and bolts of it. So I'm buying shares. I sold pretty much an at the money call. You can work this down a little bit, but I added a $250 and $200 out of the money put. So I have two puts to help me with protection if I need it. And then I have the 470 call in case price can go up to hit all-time highs and then some. So I'm sacrificing the upside. I still have shares of Tesla. I'm up, I don't know, $80,000 on profit right now in Tesla, but I'm using some of those as just like indefinite longs. I'm using some that I'm selling calls against. And this is another one. I'm like, I like the premium. I think it's pretty healthy. And granted, if Tesla goes from current price to $900, I'm sacrificing a lot of upside on the trade, but I'm also lowering my cost basis by a quick $90. So that's why I took the trade. So I put it there in a Project Options Edge. Okay. All right. So cash settled at 72. Let's go back to SPX. I'll do the exact math. It should be 625 according to the broker. So we had an 1820 debit. And right now we're at 67.72. So that's $7.40. So if you let this thing cash settle on the day, so cash settling on the day, if you let the put side iron fly, put side trade, cash settle, the original credit was 1820 and the cash settle debit is 625. Net 1080 on the day. Not bad. So and this is what's kind of fun about the double ups is this is what I update. It's like I'm just curious, like how well could we have managed profit today? Would I wish I would have stayed in the trade for another $900 profit? Of course. But I'm in two trades. I managed risk. I got another winner on daily profit play. I'm up a few $100 for the day. I'm pretty happy. Like I'm not greedy when I'm taking 0 DT trades. But it's always fun to know like the risk is small and the profit opportunity is pretty massive. And I mean, that's a big fat winner on the day. It's crazy. So anyway, good stuff. All right. So you got that, Larry? Yep. Jim, that's on Project Options Edge. Okay. So anyway, we're talking about oil. I've got some futures trades running as long as the oil stays above $50 by the end of the year, which we should be finding that. But let's go oil futures. Right now, it is up about 165 out of the max 220. So I'm up 75% of my max profit here. And this is going to expire December 16th. So as long as we stay above, the reason I'm not closing the trade out right now for this profit is because I do have a $500 profit trap in here. So if we come down to like 53, 52, $51 in crude futures, then I do have a $500 profit trap here before that $50 strike would be threatened. So that may offer me a bit more. I mean, I have a 220 max profit on the credit side, and I could potentially make another $500 on top of that. So I'm willing to hang out of the trade towards the expiration for that exact reason. Okay, so that's oil. We did gold, we did silver. Take a look at dollar index. We're back above 100. So the dollar handle has done what I expected, which is we make this little push on the right side of this wedge. We get up to the 100 period or the 100 handle, possibly into the 101 or 102. I'm not sure how aggressive the bulls are going to be on the dollar, but I do think that this might trigger some short loss covering or some squeeze trading to the upside. I could see the dollar, especially if the market's going to slide a little bit lower. I mean, right now we're talking 1, 2, 3, 4, 5 days in a row bullish dollar. So do we go another 3, 4, 5 days in a row? And if so, where's it at? Maybe 102, right back where the start of this wedge happened. So, I mean, I could go back months and talk about this. Like I kind of called the bottom here during FOMC. I said it wasn't a surprise if we see a bottom in the dollar. And from that point, 96 all the way now to 100. There's a 400-point move in the dollar. So not a bad trade. But, do I call the top on the dollar? Of course not. Not even close. Like, don't call the top here. I'd be waiting for price to either roll over on its own or get up to a resistance level like this 101, 150, 102 handle and then start topping out. So I really just look at it this way. Can we break that trend line? Because if it stays bullish on that trend line, don't short the dollar. And this might surprise a lot of traders to the upside because it was a very crowded short trade. So if it's going to squeeze, it has potential to keep running. Okay. We did gold, we did silver, we did oil, we did Bitcoin, individual stocks. We'll have a look at it all today. Heat map wise, where do we settle? Bloody red. 69.9% of stocks declining. And again, big companies in red. So Tesla down, Google down, Meta down, Amazon down, Apple flat, Oracle way down, AVGO, Nvidia down. I'm glad we took some profit on Nvidia. We did that for pinch point. So we'll see how this plays out. But yeah, I mean, there's some green sprinkled in, but not a ton, like 30% of stocks, 27.4% of stocks advancing. This is the broader market issue. When you have like 65, 7% of stocks declining, you typically see a down day, which was what was so surprising last week is we had one of the days in particular, it was like 66, 69% of stocks declining and the market was still up because NVIDIA was up like 5%. And then it had another day of like 3 to 4% positive, right? So Mag 7 was like, that was a huge disconnect last week. You saw, I warned about this on the market breadth indicator. So we're at 38% of stocks on the S&P 500 that are above the 50-day. So like we're in a correction zone, and then how many stocks in the S&P? So we still have 53% of stocks above the 200-day. So we're essentially in like a big stay out window, right? You've got most stocks now. 62% of stocks are below the 50-day moving average, but you still have 53% of stocks above the 200-day. So it's just a classic like indecision zone. So the best indicator would be if we're going to see the market responding to a bottom, we would like to see this, how many stocks to the 50-day return to 50%. If this makes a run back up towards 50+% and we stay bullish here, I think that's a good sign. So that to me is a sign that the broader market is willing to kind of show its recovery strength as opposed to, well, if Mag 7 can't hold us up here and the semiconductors can't hold us up here, then this market has no business being at the valuations and highs that it is. So one thing to watch, and especially into like the end of the year rally. Okay. All right. Nasdaq, 55% of stocks above the 50-day and 55% of stocks above the 200-day. So still, broader market Nasdaq is still in a buy zone. Costco, I kind of want Costco to split. I just think the stock price is ridiculous. I'm not interested in buying $1,000 stock. Walmart, I let my shares go at 102. Nike is pulling back, but I've got some levels all the way down here to I think I took profit on Nike already. I think I did. Let me double check. Nike. Nope. So 47. Oh, I did take profit on the naked puts. This is a ratio spread for Project Options Edge. There's still a 97% chance of profit. It's up. Max profit 106. I'm up 98. I might take the profit here this week. I mean, it's out 73 days, but I'm only holding out for like another $8 of profit. I think I'm just going to take profit here on Nike for Project Options Edge. I'll write that one down. Nike for some profit protection. Okay, cool. Home Depot. This one, I think I still have a ratio spread on. I did this review last week for Project Options Edge. Here's Home Depot, 290 by 280, still have a 99.5% chance of profit. 170 is my max credit. I'm up about 55%. Need another 73 days. That's fine. What else? Lowe's, MasterCard, Visa, Amex. Crazy, right? Higher demographic. Amex is up to fresh highs. Johnson & Johnson pulling back a little bit after just an awesome surge. I sold some puts at the 135. Did really well on Johnson & Johnson. Progressive at 209. I think, let me check my levels here. PGR. This just turned into a small drawdown. Well, when did we have earnings on Progressive? January. So I'd love to see this price stabilize. If it is a slow grind, price would have to be back below 190. I'm going to set a chart alarm here. Let me set a chart alarm at 190. That is my naked put portion of my ratio spread. So the reason I'm not going to do anything in the trade is right now it's in a small drawdown. But this trade itself, I still have an 84% chance of profit. I have a line in the sand at 190. If this slowly, and hopefully that's like the operative word here, slowly makes its way down to like 205, 200. The closer we get to this January expiration, if I'm hanging out around 205 or $200, this might offer up a bit of a profit trap before. I don't really want the shares of Progressive. I don't, but I also think that if I get them, it's a pretty easy repair. If I did take the shares, PGR, if I went out, let's say I go out like 30 days and I sell I could probably get $5 to $7 for an at the money call. So I repair the stock with a $5 bonus trap. I own the shares at 184 or so. Flip it for maybe $500. So it wouldn't be, I don't think, a very painful trade if we had to take any assignment and I'd flip it and repair it. But if it holds here, that bottom was 200. If we just go back up and start to go to 215, 220, maybe fill this gap at 236, then I'll just keep the full profit, which is a couple dollars there. PGR is a 210 winner. So anyway, we'll see. There's that one. Chubb hold up a little bit better. In fact, this one's way better. I think this is probably because Buffett has it versus Progressive. Palantir, this was a big story of red today. Big gap to the downside. Even though they beat earnings, but the market didn't care. Palantir got crushed. HIMS, earnings was a miss on EPS. Highly volatile. I've got some ratio spreads way down here into like the low 20s. Carvana, missed earnings. Surprised this one's doing as well as it is. It's still down. I mean, that's down, what, 20%? Down about 25%. CRM, I'm going to stay out of this one. I don't think I have any CRM exposure. I do not. O'Reilly, after a split, I was waiting for this thing to sell off. It finally sold off 16%. Zillow, I was looking to get back in this one if we come down to the low like 30s and 40s again. Uber, hanging in there pretty well. Uber, beat earnings, pretty large gap to the downside. I'm just not super excited about buying Uber at like $90 a share. I did a lot of ratio spreads, bull put spreads, things like that. Generated some good income along the way. Now I'll just kind of ride it out. Lyft, I already took profit of this one. When this thing went back up, I bought the shares. Um, I think I bought them around here, around this low. Shares go up, pull back, and then ripped up to that $20+. That's where I closed it. So closed out my shares around that $22 handle. I don't think I have anything left on Lyft right now. Lyft has been closed. Yep, full profit. Cool. Okay, and then sectors, currencies. Let's check currency strength. Dollar's probably the top of the food chain today. Dollar is up, JPY is up. So we have some risk off trading. This is interesting. Dollar yen. Doesn't look like much, but compare it to Aussie yen, down a much bigger push. CAD yen also nice little turn for about 200 pips. Swiss yen is at time. Ooh, it's getting closer. Swiss yen might be setting up for a topping pattern. I'm patiently waiting, but if we take out this low, I'm looking for some type of topping pattern on the Swiss yen. I'd love to sell this thing back to like 166. So I'll wait for it, but I will definitely take a swing trade if that's going to set up. Euro Aussie, Euro CAD, Euro Swiss. I was long off the lows. Euro pound, just robot trading. Euro yen, same thing on Swiss yen. If it takes out these trend lines, maybe sweeps this level at 172. Looking for a sell trade. Euro New Zealand, no trade. What's my Aussie New Zealand? I get stopped out of this one. Son of a biscuit. Not yet. I've got to stop at 1550. I'm hoping this thing holds up. These are, I mean, I'm in trades 1 and 2 right now for my Forex trades. So I took a trade here at 1440 or 1350, filled at 1440, stop loss at 1550. So there's a little bit more wiggle room here as we hit the highs. We're still showing overbought conditions on a daily time frame with some divergence. Also, I mean, I'm just kind of calling out a good technical setup here. Bottom 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 candles long to the upside. I'm hoping that runs out of steam. We start to reverse the other way. If this thing ends up going topping pattern, let's say we hit these levels, come all the way back down, give us a 3-wave swing, then that would be my trade. So I'm hoping we survive this 1550 stop. Aussie dollar. I still like buying the dips. It's just got to be really small and low leverage. CAD Swiss looking a little bit better off these recent lows. I'm trying to get a bottoming pattern. CAD yen, Swiss yen, Euro Aussie. We did some of those earlier. Pound pairs. Pound has been getting his butt kicked. Pound Aussie way down. Pound CAD way down. Pound Swiss. I'm still holding a small position at 107. Pound yen, no trade yet. Pound dollar. Pound New Zealand pulling back. Pound dollar. Not touching this thing. I think Euro dollar looks a little bit better. I think Euro dollar can still pull back into like the 112 to 110 handle. Honestly, you zoom out, there's maybe just a large channel here. Low to high, higher low to higher high. I mean, if we pull back to like 112, even all the way back down to like 110, 108, I'd still be watching to kind of buy super, super low and then trade the big range. New Zealand CAD, probably just end up trading a double bottom on this thing. New Zealand Swiss, I'd love to see some trend lines breaking to the upside. Hasn't happened yet. New Zealand yen, a big range, 85.50 to 88.50, just a big range for right now. I don't love this trade. If I'm going to watch the yen basket, I'm watching dollar yen, Swiss yen, euro yen primarily. New Zealand dollar, maybe a double bottom here around 5,500. Dollar CAD, getting a nice little boost. I will look to short the dollar CAD around this like 145, 146 handle again. This isn't a bad spot to get some confirmed longs. If you're long dollar CAD, that actually looks kind of good to continue up towards like 144, 145. Again, stop loss is needed. I mean, if you're buying now, stop loss with invalidation below like 38.50, but going up to like 44, 4,500. Dollar Swiss looking better. I'm long in this one, trying to take it into a pocket trade at 86, 8,700. Dollar yen still in a big channel. No trade yet. What about our correlation today? 1603. All right, I'll keep an eye on that one. Anything else? That's probably about it. All right, any other thoughts, questions? We good? So pretty nasty day in the market. What's the tape read? We're probably down over 1% for the day. S&P down 1.19, Nasdaq down over 2%, Dow down 0.5, Russell down 1.73, VIX up to 19. So that's a pretty decent run on the VIX. All happened kind of overnight. We actually faded off the recent highs this morning. Tomorrow's another day. So is the VIX going up above 20? We're coming back down to 18, 17, 16. I don't know. Come join me tomorrow and find out. So I'll be back tomorrow morning. Daily profit plan, 9 a.m. All are welcome. Come one, come all, and we'll try to find some good trades. Okay, good stuff. Appreciate y'all being here. Thanks for tuning in. Whether you're here live or watching the session, click the thumbs up button, subscribe to the channel, like all that stuff. Helps the channel, supports the algorithm, supports the content, all that good stuff. And happy to be here every single day. All righty. See you tomorrow.